Hello, it's January 2nd, I think, 2022, and this is going to be the 2021 year in review. So I have to do this, every year to make sure that I record all my profits, gains, or losses for each year. So this is kind of going to be a routine thing. I'm going to take you through the numbers real quick, show you what I have gained or lost over the year, and where my gains come from or my losses. So after I review the account really briefly, I'm going to get into the numbers right away so we can square the circle, eh? All right. First off, this is the account. That's the last trading day of 2021. And here's the year chart without making you guess anymore or without making you wait. This is the yearly gain, and I think I've actually lost to the S&P 500 amazingly, even though I'm up over 20% on the year. So $31,135.40. For kicks and giggles, let's really quick take a look at the SPY. Let's see where it is here. All right. SPY is an exchange traded fund that tracks the performance of the S&P 500. And as you can see, it's up 26.65%. So this is the first year since I've been doing these videos that I'm actually losing to the S&P 500. And the main reason for that is, of course, my unfortunate timing errors with the Chinese market. So I have been buying Alibaba, VIPS, VipShop, and JD.com. So those investments, and I've been playing options around them, those investments have not done very well if you know anything about the Chinese market as of late. So I have been suffering losses. If it wasn't for these markets, then I actually would have beaten the S&P 500 if I had just stayed in cash. So that's how poorly they have performed. However, hopefully in 2022, at some point during the spring or summer, things turn around. And I have actually, when we go into the options activity, you'll see that in December, I've actually been buying call options for the Chinese market in hopes of major gains. It's one of my strategies that I employ that it looks kind of dire at the bottom, but to be honest, it doesn't look that dire now because I'm still up 20% because of things like Apple and options activities that I've done, puts and call selling. It doesn't look that dire actually, but this is pretty dire. If you were a Chinese investor in Chinese stocks, this is pretty dire moment. It's very bad. It could get lower, but it doesn't look good at all. So let's go into the account and I'll show you here. So this is the S&P 500. Oops. I'm going to run through the account really quick because I want to get to the numbers. You can pause the video at any moment to try to figure out what my exact positions are. This is the option positions here. You'll see all the information on the left and on the right is the daily performance of each option position. Pause the video at any time. These are my equity positions. Of course, a lot of the options are tied to the equity positions, so you can't look at them in isolation. I'm getting some Goldman Sachs, which I really like. And I'm going to be getting rid of this DD share as soon as the delisting happens. The reason I bought it is just because I want to find out what happens at the delisting. So, and NTP I'm going to try to get rid of. I've collected a couple $100 of options already on it, so I'm going to dump the position at some point. I don't know when. Hopefully, I don't lose too much money on it. It's a Chinese real estate developer type of deal. So, if you want to look at the account tab. This is the account tab here. You can see I'm currently $66,600 in debt on this account, which represents a total of 26.69% of the overall market value of the account, which stands at $250,000 right now. These are the equity positions sorted by total return, and this is by equity. You can see 3 of my top 4 positions are actually in the red at the moment, which is not good. Apple is more than making up for the rest of them. However, I've had Apple for the longest. It's kind of like the base position of my account here. So it's doing well to offset my other misfortunate realities. You can see the shop's down over $5,000, which is quite substantial. And then realty income is actually up 3,000. So those are my biggest positions here. Now, I want to get into the numbers. This year has been pretty even spread when it comes to like where the income comes from. And I have a spreadsheet that I keep track of where the income comes from so I can kind of adjust my performance as needed. And I'm going to show you that spreadsheet now, which is kind of a very simple data sheet that represents the numbers. Let me see if how much of that you can see here. Okay, you're gonna have to, or I'm gonna have to actually zoom out a little bit. Well, anyway, it actually goes, I'm just gonna show you the bottom. I just list the option activity that I've done, and the January is all the way on the left. I'm not gonna show you those numbers because it just takes too long to like zoom out. But at the bottom number here is the dividends that I have received each month, totaling for almost $3,000 in dividends from this account alone. Those are, part of that $31,000 that I have gained. You can see the total gain is right here. This is just cash position, how much margin I have at the moment at the end of the year. So $17,000 and 381 is the amount of options related activity that's contributed to my account. So that's about half. And then another $3,000 of dividends, which leaves about $10,761 from investment gains, unrealized gains, and realized gains. So trading and investing, $10,761. Now, what's interesting is that if we go here on the Robinhood tab and we click on Apple, we can see how much of those gains are Apple on their own. So 44.18. I pretty much held all 500 shares throughout the entire year here. So let me do a quick math calculation here. So 44.18 times 500. So what's interesting is that Apple is actually giving me $22,090 worth of gains. All right, so it's pretty tragic. Let me go back to a webcam here. So Apple's giving me $22,090 worth of gains. So I've actually, if it wasn't for that position, I would have lost. I would have been, my account would have been down over 10 grand. That's the reality situation. So it's not very good. Not supremely happy about that. However, I think personally that I'm set up to profit quite a bit in the near future, in the next year or two, given the option positions that I've managed to spend money on. If I didn't spend that money, okay, like you can see, like in December, let me show you real quick. This is important, okay? Like, oops, my bad. I was just watching something. The guy owns a bank. Oh, you can't see that yet. All right. So, in December, look how I went on a shopping spree when it comes to call options and leaps, long-term call options. So basically there are positions that expire in like a year or two. And you can see how much that I've spent. I've spent over 7 grand, so 7,565. And that's including some of the positives. Okay, every positive number is premium income that I receive. And every negative number is when I've purchased an option, right? So sold an option, purchased an option. So you can see there's quite a bit of positive there. There's a big chunk of $2,400 there that I received from selling eBix calls. And then there's another big chunk, where was it? There's $475 chunk there. So 135. So it's quite a bit, okay? Well over $3,000. So if I received that, if I didn't buy these $10,000 worth of calls, basically, I would have been actually positive on the money received. My debt load would have been lower, and I would have been ended up, with a much better cash position there. So it's really costing me like to be in these Chinese plays, but then again, these are opportunities to gain. I mean, there are opportunities for me to sell call options against my call options, if that makes any sense, to make it a spread. So what that means basically is if you buy a contract that will let you purchase a certain amount of shares in a certain amount of time, you can sell another contract against it to receive premium instead of paying it. That's at a higher price than the one you purchased. And you can even set it a shorter duration date. So you can sell multiple of those smaller contracts against that one big contract that you have. So it's kind of a tough thing to grasp if you don't know options. But maybe I'll do another video dedicated to explaining that in the future. I want to go back to a little bit of education, like home style, no edit cuts, like bro education instead of, over edited simplistic ones that probably do a much better job. But my point here is that I just want to get the numbers in. That was me slapping my elbow, by the way. So just want to get the numbers in, do the year-end review, and show you where I'm at and what I'm thinking for the next year, which is, obviously I'm expecting a positive year for my account. Again, I'm really actually bummed out that I did not outperform the S&P 500. I missed by 6 percentage points, and that weighs pretty heavy because considering I beat the S&P 500 the last 2 years, I really wanted to make it 3 years in a row. But cumulative, I have beaten the S&P 500 over the last 3 years, so I don't feel that terrible. But many of you guys probably done a lot better if you were in the high-flying tech stocks. If you got like Fat Man, what is it, like Facebook, Amazon, what was T? Tesla, Microsoft, Apple, and Netflix, maybe? Anyway, so if you were some of these acronyms and high-flying tech stocks, then you probably did a lot better than I did if you were just to hold them through the year instead of me just like busting my ass off trying to like sell options, buy options, and do all this crazy stuff so I can be negative $10,000 relative to my 20,000 gain for just sitting in Apple. It's kind of it's a little frustrating. And it's a tiny bit depressing. It tests your, mental fortitude, and it makes me second guess whether what I'm doing is the right thing or not. But I've set out on this path here, and I'm gonna see it through. So hopefully 2022 and 23 round off with me beating the S&P 500 and completing that 5-year period that it's pretty coveted, of beating the markets consecutively, and that would be a really big accomplishment for me personally. So hopefully that happens, and by that time I'll be that much closer to that $1 million mark that I've been trying to get to. So that's the year in review. I'm expecting my Chinese positions to really materialize in the next year if and when relations with China improve, especially between the financial regulators and the leader of China. Hopefully, the U.S. authorities and Chinese leader can sit down at a table and talk things out, and just have a friendly, intertwined markets like they should be, instead of, warring for dominance kind of behind the scenes through obscure hints and rules and political play that kind of scares everybody else from investing in that Asian region of the world that has so much potential. What I think of American markets, I think American markets will remain strong as usual. There may be a correction due to the rate increases that are supposed to be happening in the near future. towards the end of 2022. The rate increase is basically what the targeted rate is of the Federal Reserve, which is the United States central bank. They have control over the interest rate policy of the country. So they kind of get to set what money is worth, basically. And so that's going to increase. And with the increase of the rates, usually a fall in stock prices is associated closely with that due to many factors that we're not going to discuss here. But I do think that the American market is going to be very resilient, especially since it's fairly politics immune, let's just say. Being a democracy, it's very predictable, knowing what the leaders are doing, especially with our current president. It's very predictable because he seems to have a lot of influence from the people. He seems to be very influenced from the people behind him, instead of our previous president, who was kind of a wild card. And if anything, the markets discounted that wild card, and it added a little bit of uncertainty and a bit of a discount. So it probably traded below what it would have traded otherwise. Now, if you look at the China's market, you can see this effect because of the leader of the Chinese party is actually probably putting, I want to say, 60 to 75% discount on the Chinese stocks, somewhere abouts, alone. So if China was very predictable, just like US, it would trade at much higher valuations. But anyways, it is what it is. I'm expecting those companies to continue growing, those companies being Chinese companies that I mentioned earlier. And that'll be it. I mean, let me know how you did over the year. I want to hear your numbers. One of the bigger reasons that I started this channel actually is so I can hear what other people, how are they progressing in their accounts. I look at people's account videos sometimes because I'm just really curious to see how my peers are doing in this kind of friendly, everybody gets rich, not competition, but journey, let's say, camaraderie. Okay. It's not really it's not a bad competition if we're all getting richer, right? Unless some of us are losing money, then, that's fair. Hopefully not many of you are, though. Hopefully none of you, heavily invested all of your assets into ARK or something like that, or Peloton. And you guys are up on the air. Well, let me know how your performance is. I'm really curious to find out. And I'll probably make another video on Sunday. I may actually even skip because I'm moving, but I will try my best to set everything up by next Sunday, and I'll video from a new location. All right, let me know how y'all did. Okay? Okay. Well, with that said, I'll stop it right here. All right, peace out.